Iran is an energy superpower in the petroleum industry and Iran plays an important part in it. In 2004 Iran produced 5.1% of the world Euro unregistered trademark S total crude oil per day, which generated revenues of $25 billion to $30 billion and was the counter Euro unregistered trademark S primary source of foreign currency. At 2006 levels of production, oil proceeds represented about 18.7% of gross domestic product. However, the importance of the hydrocarbon sector to Iran Euro unregistered trademark S economy has been far greater. The oil and gas industry has been the engine of economic growth, directly affecting public development projects, the government Euro unregistered trademark S annual budget, and most foreign exchange sources. In FY 2009, the sector accounted for 60% of total government revenues and 80% of the total annual value of both exports and foreign currency earnings. Oil and gas revenues are affected by the value of crude oil on the international market. It has been estimated that at the Organization of the Petroleum Exporting Countries quota level, a $1 change in the price of crude oil on the international market would alter Iran Euro unregistered trademark S oil revenues by $1 billion. In 2012, Iran, which exports around 1.5 million barrels of crude oil a day, was the second largest exporter among the Organization of Petroleum Exporting Countries. In the same year, officials in Iran estimate that Iran's annual oil and gas revenues could reach $250 billion by 2015. Iran plans to invest a total of $500 billion in the oil sector before 2025. History the era of international control, 1901 Euro 79 equals. The history of Iran Euro unregistered trademark S oil industry began in 1901, when British speculator William Dar Euro unregistered trademark RC received a concession from Iran to explore and develop southern Iran Euro unregistered trademark S oil resources. The discovery of oil in 1908 led to the formation in 1909 of the London-based Anglo-Persian Oil Company. By purchasing a majority of the Compania Euro unregistered trademark S shares in 1914, the British government gained direct control of the Iranian oil industry, which it would not relinquish for 37 years. After 1935 the APOC was called the Anglo-Iranian Oil Company. A 60-year agreement signed in 1933 established a flat payment to Iran of £4 for every ton of crude oil exported and denied Iran any right to control oil exports. In 1950 ongoing popular demand prompted a vote in the Mali to nationalize the petroleum industry. A year later, the government of Prime Minister Mohammad Mossadegh formed the National Iranian Oil Company. A 1953 quota Euro unregistered trademark a copyright act led by British and US intelligence agencies ousted the Mossadegh government and paved the way for a new oil agreement. In 1954 a new agreement divided profits equally between the NIOC and a multinational consortium that had replaced the AIOC. In 1973 Iran signed a new 20-year concession with the consortium. Beginning in the late 1950s, many of Iran Euro unregistered trademark S international oil agreements did not produce the expected outcomes. Even those oil companies that managed to extract oil in their designated areas contributed very little to the counter Euro unregistered trademark S total oil production. By the time of the Islamic Revolution of 1978 to Euro 79, the five largest international companies that had agreements with the NIOC accounted for only 10.4% of total oil production. During this period, Iran Euro unregistered trademark S oil industry remained disconnected from other industries, particularly manufacturing. This separation promoted inefficiencies in the counter Euro unregistered trademark S overall industrial economy. In 1973, at a time when Iran was the second largest oil exporter in the world and the Arab-Israeli War of October 6 the Euro 25 was pressurizing the price of oil, the Shah of Iran told the New York Times, "Of course the world price of oil is going to rise, certainly. And how? You, Western nations increase the price of wheat you sell us by 300%, and the same for sugar and cement. You buy our crude oil and sell it back to us, refined as petrochemicals, at 100 times the price you've paid to us. It's only fair that, from now on, you should pay more for oil. Let's say 10 times more. Equals the era of nationalized oil, 1979 a euro present equals. Following the revolution, the NIOC took control of Iran a euro unregistered trademark S petroleum industry and cancelled Iran a euro unregistered trademark S international oil agreements. In 1980 the exploration, production, sale, and export of oil were delegated to the Ministry of Petroleum. Initially Iran a euro unregistered trademark S post-revolutionary oil policy was based on foreign currency requirements and the long-term preservation of the natural resource. Following the Iran a euro Iraq War, however, this policy was replaced by a more aggressive approach, maximizing exports and accelerating economic growth. From 1979 until 1998, Iran did not sign any oil agreements with foreign oil companies. Early in the first administration of President Mohammad Khatami, the government paid special attention to developing the counter-euro unregistered trademark S oil and gas industry. Oil was defined as intergenerational capital and an indispensable foundation of economic development. Thus, between 1997 and 2004 Iran invested more than $40 billion in expanding the capacity of existing oil fields and discovering and exploring new fields and deposits. These projects were financed either in the form of joint investments with foreign companies or domestic contractors or through direct investment by the NIOC. In accordance with the law, foreign investment in oil discovery was possible only in the form of buyback agreements under which the NIOC was required to reimburse expenses and retain complete ownership of an oil field. Marketing of crude oil to potential buyers was managed by the NIOC and by a government enterprise called NICU. NICU marketed Iranian oil to Africa, and the NIOC marketed to Asia and Europe. According to IHS-CERA estimate, oil revenue of Iran will increase by a third to $100 billion in 2011 even though the country is under an extended period of U.S. sanctions. Oil production and reserves. Total oil production reached a peak level of 6.6 mbbld in 1976. By 1978, Iran had become the second largest OPEC producer and exporter of crude oil and the fourth largest producer in the world. After a lengthy decline in the 1980s, production of crude oil began to increase steadily in 1987. In 2008 Iran produced 3.9 million barrels per day and exported 2.4 mbbld. Accounting for 5% of world production, it returned to its previous position as OPEC a euro unregistered trademark S second largest producer. According to estimates, in 2005 Iran had the capacity to produce 4.5 mbbld. It was believed that production capacity could increase to 5 mbbld to 7 mbbld, but only with a substantial increase in foreign investment. Iran a euro unregistered trademark S long-term sustainable oil production rate is estimated at 3.8 mbbld. According to the Iranian government, Iran has enough reserves to produce oil for the next 100 years while oil reserves of other Middle Eastern countries will be depleted in the next 60 years and most other oil-rich countries will lose their reserves within the next 30 years. In 2006 Iran reported crude oil reserves of 132.5 billion barrels, accounting for about 15% of OPEC a euro unregistered trademark S proven reserves and 11.4% of world proven reserves. While the estimate of world crude oil reserves remained nearly steady between 2001 and 2006, at 1,154 billion barrels, the estimate of Iran a euro unregistered trademark S oil reserves was revised upward by 32% when a new field was discovered near Bushehr. Market value of Iran's total oil reserves at international crude price of $75 per barrel stands at $10 trillion. In the early 2000s, leading international oil firms from China, France, India, Italy, the Netherlands, Norway, Russia, Spain, and the United Kingdom had agreements to develop Iran a euro unregistered trademark S oil and gas fields. In 2004 China signed a major agreement to buy oil and gas from Iran, as well as to develop Iran a euro unregistered trademark S Ye Davran oil field. The value of this contract was estimated at $150 billion to $200 billion over 25 years. In 2009, China National Petroleum Corporation signed a deal with the National Iranian Oil Company whereby the former took ownership of a 70% stake upon promising to pay 90% of the development costs for the South Azerbaijan oil field, with the project needing investment of up to $2.5 billion. Earlier that year, CNPC also won a $2 billion deal to develop the first phase of the North Azerbaijan oil field. A more modest yet important agreement was signed with India to explore and produce oil and natural gas in southern Iran. In 2006 the rate of production decline was 8% for Iran unregistered trademark S existing onshore oil fields and 10% for existing offshore fields. Little exploration, upgrading, or establishment of new fields occurred in 2005 6. However, the threat of American retaliation kept the investment way below the desired levels. It only allowed Iran to continue to keep its oil export at or below its OPEC-determined quota level. Today, much of the equipment needed for oil industry are being produced by local manufacturers in Iran. Besides, Iran is among the few countries that has reached a technology and know-how for drilling in the deep waters. Oil refining and consumption. In 2011 Iran unregistered trademark S refineries had a combined capacity of 1.457 mbbld. The largest refineries have the following capacities: Abadan, 350,000 barrels d. Esfahan, 284,000 barrels d. Bandar Abbas, 232,000 barrels d. Tehran, 220,000 barrels d. Arak, 170,000 barrels d. And Tabriz, 100,000 barrels d. In 2004 pipelines conveyed 69% of total refined products. Trucks, 20%. Rail, 7%. And tankers, 4%. Oil refining produces a wide range of oil products, such as liquefied petroleum gas, gasoline, kerosene, fuel oil, and lubricants. As of 2011 Iran is a net exporter of petroleum products thanks to large exports of residual fuel oil, but the refineries cannot meet domestic demand for lighter distillates such as gasoline. Between 1981 and 2010, domestic consumption of oil products increased from 0.6 mbbld to 1.8 mbbld, an average annual growth rate of 3.7%. Between 1981 and 2004, consumption of gasoline grew by 6% annually, but domestic production met only 75% of demand for this product. In 2004 the country imported $1.6 billion worth of gasoline. By 2006 it imported 41% of its gasoline, but by 2010 imports were down to 19.5% of gasoline consumption, and heavy investment in new refining capacity may see Iran exporting gasoline by 2015. Refining capacity increased 18% in 2010 and the target is to increase refining capacity to 3.5 million barrels per day. Trade in oil and oil products. In 2006 exports of crude oil totaled 2.5 mbbld, or about 62.5% of the country unregistered trademark S crude oil production. The direction of crude oil exports changed after the revolution because of the U.S. trade embargo on Iran and the marketing strategy of the NIOC. Initially, Iran unregistered trademark S post-revolutionary crude oil export policy was based on foreign currency requirements and the need for long-term preservation of the natural resource. In addition, the government expanded oil trade with other developing countries. While the shares of Europe, Japan, and the United States declined from an average of 87% of oil exports before the revolution to 52% in the early 2000s, the share of exports to East Asia increased significantly. In addition to crude oil exports, Iran exports oil products. In 2006 it exported 282,000 barrels of oil products, or about 21% of its total oil product output. Iran plans to invest a total of $500 billion in the oil sector before 2025. In 2010, Iran, which exports around 2.6 million barrels of crude oil a day, was the second largest exporter among the Organization of Petroleum Exporting Countries. Several major emerging economies depend on Iranian oil. 10% of South Korea unregistered trademark S oil imports come from Iran, 9% of India unregistered trademark S, and 6% of Chinese. Moreover, Iranian oil makes up 7% of Japan unregistered trademark S and 30% of all Greek oil imports. Iran is also a major oil supplier to Spain and Italy. In the same year, officials in Iran estimate that Iran's annual oil and gas revenues could reach $250 billion by 2015 once the current projects come on stream. According to IHS-CERA estimate, oil revenue of Iran will increase by a third to $100 billion in 2011, even though the country is under an extended period of U.S. sanctions. As of January 2012, Iran exports 22% of its oil to China, 14% to Japan, 13% to India, 10% to South Korea, 7% to Italy, 7% to Turkey, 6% to Spain, and the remainder to France, Greece, Taiwan, Sri Lanka, South Africa. Natural gas. In addition to the natural gas associated with oil exploration and extraction, an estimated 62% of Iran unregistered trademark S 32.3 trillion cubic meters of proven natural gas reserves in 2006 were located in independent natural gas fields, an amount second only to those of Russia. In 2006 annual production reached 105 billion cubic meters, with fastest growth occurring over the previous 15 years. In 2006 natural gas accounted for about 50% of domestic energy consumption, in part because domestic gas prices were heavily subsidized. Natural gas production will reach 700 million cubic meter day by 2012 and 900 million cubic meter day by 2015. Since 1979, infrastructure investment by Iranian and foreign oil firms has increased pipeline capacity to support the Iranian gas industry. Between 1979 and 2003, pipelines to transport natural gas to refineries and to domestic consumers increased from 2,000 kilometers to 12,000 kilometers. In the same period, natural gas distribution pipelines increased from 2,000 kilometers to 45,000 kilometers in response to growing domestic consumption. Gas processing plants are located at Ahvaz, Dalan, Kangan, and Maran, in a corridor along the northern Persian Gulf close to the major gas fields. South Pars, Iran unregistered trademark S largest natural gas field, has received substantial foreign investment. With its outputs intended for both export and domestic consumption, South Pars is expected to reach full production in 2015. However, delays in lower production in the Iranian side due to sanctions is resulting in migration of gas to the Qatari part and a loss for Iran. The output of South Pars is the basis of the Pars Special Economic Energy Zone, a complex of petrochemical and natural gas processing plants and port facilities established in 1998 on the Persian Gulf south of Kangan. Iran is able to produce all the parts needed for its gas refineries. Iran is now the third country in the world to have developed gas-to-liquids technology. In the 1980s, Iran began to replace oil, coal, charcoal, and other fossil fuel energy sources with natural gas, which is environmentally safer. The share of natural gas in household energy consumption, which averaged 54% in 2004, was projected to increase to 69% by 2009. Overall, natural gas consumption in Iran was expected to grow by more than 10% per annum between 2005 and 2009. With international oil prices increasing and projected to continue increasing, international demand for natural gas and investment in production and transportation of natural gas to consumer markets both increased in the early 2000s. Iran set a goal of increasing its natural gas production capacity to 300 billion cubic meters by 2015 while keeping oil production stable. To achieve this capacity, the government has planned a joint investment worth $100 billion in the oil and gas industry through 2015. market value of Iran's total natural gas reserves at comparative international energy price of $75 per barrel of oil stands at $4 trillion. Following the discovery of a large gas deposit in the Caspian Sea in 2011 estimated at 50 trillion cubic feet, Iran could rank first in the world in terms of gas reserves. In addition, Iranian media have reported in 2012 the discovery of gas field as big as South Pars gas field in the oil-rich Khuzestan province. In 2011, Iran signed a contract with Baghdad and Damascus in order to export iron unregistered trademark S gas to Iraq, Syria, Lebanon, the Mediterranean region and eventually Europe. Oman and Kuwait were negotiating an import agreement in 2014. Once all pipelines become operational, Iran can potentially export a total of more than 200 million cubic meter of natural gas every year to Iraq, India, Pakistan, and Oman. Major foreign projects. In 2004 Iran signed a contract with France and Malaysia for production and export of natural gas and another agreement with European and Asian companies for expansion and marketing of its natural gas resources. In 2005 Iran exported natural gas to Turkey and was expected to expand its market to Armenia, China, Japan, other East Asian countries, India, Pakistan, and Europe. The first section of a new line to Armenia opened in spring 2007, as a much-discussed major pipeline to India and Pakistan remained in the negotiation stage. Among some more recent deals, Switzerland unregistered trademark S Energy Company EGL, signed a 25-year LNG export deal with Iran unregistered trademark S National Iranian Gas Export Company on March 17, 2007, reportedly valued at $18 billion. Switzerland will buy 5.5 billion cubic meters of Iranian natural gas each year, beginning in 2011. In April 2007, OMV, the Austrian partially state-owned energy company, signed letters of intent with Iran, worth an estimated $22.8 billion, for Iran to supply Europe with gas. The United States has expressed strong opposition to both the Swiss and Austrian deals with Iran. The National Iranian Gas Company is expected to finalize a natural gas export deal with Pakistan, with exports set to begin in 2011. The gas would be transported through OEP's pipeline worth about $7.4 billion. The plan initially also included exporting gas to India, but negotiations have stalled over pricing. Iran also is discussing a gas production and export deal with Turkey. Under the plan, Turkey would assist in developing iron unregistered trademark S South Pars field in exchange for cash or natural gas. Gas would be shipped from Iran to Turkey and Europe via a new pipeline that Turkey plans to build. Other notable petroleum sector development deals include those with Russia and China. On February 19, 2008, Russian state gas company Gazprom announced a deal to establish a joint venture company to develop the offshore Iranian South Pars gas field. A China National Offshore Oil Corporation investment deal, valued at $16 billion, to develop iron unregistered trademark S North Pars gas field and to build a liquid natural gas plant, was supposed to be signed on February 27, 2008 but has been delayed. The state-operated National Iranian Oil Company and CNOOC signed a Memorandum of Understanding in December 2006 for the project, under which CNOOC would purchase 10 million metric tons per year of LNG for 25 years. Petrochemicals. In the early 2000s, an ambitious state petrochemicals project called for expansion of annual outputs in that industry from 9 million tons in 2001 to 100 million tons in 2015. Output capacity in 2006 was estimated at 15 million tons. The goal of this expansion is to increase the percentage of iron unregistered trademark S processed petroleum-based exports, which are more profitable than raw materials. In 2005 Iran exported $1.8 billion of petrochemical products. Receiving 30% of iron unregistered trademark S petrochemical exports. Between them, China and India were the major trading partners in this industry. Iran, a Euro unregistered trademark S domestic resource base gives it a unique comparative advantage in producing petrochemicals when international crude oil prices rise. The gain has been greatest in those plants that use liquid gas as their main input. For FY 2006, the petrochemical industry Euro unregistered trademark S share of GDP was projected to be about 2%. Iran plans to invest a total of $500 billion in the oil sector before 2025. Iran, a Euro unregistered trademark S petrochemical industries have absorbed a large amount of private and public investment. In the early 2000s, 43% of these investments was financed by Iran, a Euro unregistered trademark S National Petrochemical Company, a subsidiary of the Ministry of Petroleum, which administers the entire petrochemical sector. Another 53% is owned by foreign creditors, 3% by banks, and 1% by the capital market. Most of the petrochemical industry Euro unregistered trademark S physical capital is imported, and the industry does not have strong backward linkages to manufacturing industries. In 2006 new petrochemical plants came online at Maran and Asaluay, and construction began on 3 others. Iran National Petrochemical Company's output capacity will increase to over 100 million TPA by 2015 from an estimated 50 million TPA in 2010, thus becoming the world's second largest chemical producer globally after Dow Chemical, with Iran housing some of the world's largest chemical complexes. See also: Energy in Iran, Economy of Iran, Industry of Iran, Iranian oil bourse, Ministry of Petroleum of Iran, National Iranian Oil Company, National Iranian Oil Refining and Distribution Company, National Iranian Petrochemical Company, National Iranian Gas Company, Tehran Stock Exchange, Iranian Targeted Subsidy Plan. References. External links: U.S. Department of Energy, Iran's entry, SHANA, Official News Service for Oil and Gas in Iran, Oil and Gas Industry in Iran, 2003 study, Factbox. Iran's crude export and fuel import customers, Reuters, Offshore Middle East and Caspian Sea Oil and Gas Market Report 2011, Iran Gas Markets Report, 2011, Global Data, Iran's oil exportation map by country, Iran Oil Sanctions Calculator, Reuters, Infrastructure map of Iran's fields and facilities, Persia Land of Black Gold, Iranian discoveries continue, videos. Iran's 17th International Oil and Gas Exhibition. Press TV, The Oil Industry in Iran. Part I, Part 2, Part 3, Part 4, Press TV, Iranian Oil and Gas Industry in the midst of latest UNSC sanctions. Press TV, Iran's oil drilling industry. Press TV.